Hey everyone, welcome back to Corporate Decoder, the place where we dig into company reports so you don't have to. Today we're looking at Vanguard Windsor funds and let me tell you, their report is like a family reunion. Lots of names, but who's actually making money? We'll uncover that. This report covers how the Vanguard Windsor funds did from November of 2024 to April of 2024. We are going to find out where they invested your money, how much it cost to manage, and whether they made any profit. If you like getting the real story from these corporate documents, please subscribe to the channel. We also have a Discord channel connected below. First off, this isn't just one fund. It's actually a few different ones, specifically the Windsor Fund and the Windsor 2 Fund. Each of these funds also has two classes of shares, an investor share and an admiral share. This report gives us the scoop from November through April of 2025. If you want even more information about the funds, Vanguard points you to their website. And of course, you can always call them. Let's find out what this fund costs to operate. If you had $10,000 invested in the investor shares, it would cost you $15 to manage. That is 0.0% per year. But if you held the Admiral shares, those management costs are only $9 instead, 0.19% per year. So make sure to always check which share class is being used. That number of 0.30% and 0.19% may seem small, but every dollar counts because those costs eat into your returns can add up. This fund is pretty big. It's got about $22 billion in managed assets. Remember these numbers. That is a ton of money, and this is just one of their funds. They have many other funds. The portfolio turnover rate is 25%, meaning a quarter of the portfolio is changed during the year. This means that the fund is actively moving your money around. Active funds that move stocks more often charge a higher fee, as you saw above. The report also has something called financial statements. I'm going to cover them for you. The report said that this fund has about $22 billion in net assets. This matches with what we found out earlier. They get money from dividends. Dividends are those rewards that companies pay out. It is basically getting paid to own a stock. Now let's find out what it costs to keep this giant ship of money afloat. The advisory firms earned millions to manage the company's fund, but it looks like there was a performance adjustment that ultimately reduced the fees by over $7 million. We'll see shortly if the fund's performance merited it. After all that math, what was the net result? The net result was actually negative to the tune of $932 million. These funds have had a rough 6 months. The report goes on to explain why. Did people move their money out? Let's take a look. During the period, they lost $2 billion. During that same time, people moved out money and distributions. 12% increase came from people buying more capital shares than leaving the fund. The investor shares ratio of total expenses to average net assets was about 0.30 cats. The Admiral shares ratio of total expenses to average net assets was about 0.19%. This confirms with the earlier mentioned investment costs. So what's really going on with this first Windsor fund? It appears the funds had a significant decrease in net assets resulting from operations. They did not do great and actually decreased in value. They lost $932 million from all its operations. They also lost almost $2.5 billion from all the shareholders' distributions. This means that the shareholders got more out than what the investment was worth. What about the Windsor 2 fund? Did it have a similar performance? Now let's dive into Vanguard Windsor 2 Share Fund, the bigger brother. This fund's report looks awfully similar to the first Windsor fund. It also has a schedule of all of its investments. It looks like it has stocks as well. 5% of its portfolio seems to be made up of cash. Let's check its operation costs. Hopefully it did better than the previous portfolio. Like the first report, this one cost money with an advisory team. This one cost $36 million and had $2 million taken out due to corrections. After income realized nets and changes, this fund lost $1.5 billion. These funds are not having a great year, looks like. The distributions and such looks to be a similar amount to the previous one. The investor shares expenses were about 0.33%, while the Admiral was 0.25%. This report is pretty standard for what a fund does overall. The fund had votes completed and put into actions on February of 2025. They had to elect to vote a new trustee inside of the company. The people elected were Tara Bunch, Mark Loffridge, and those listed below and are now members. Most of the company has been there and kept its spot over time. that completes the report. While the numbers paint a picture of a fund struggling in the short term, there's more to consider. The fees look appropriate for the company's scale, and even with tough periods, Vanguard's long-term reputation and experience provide some assurance. However, I would keep an eye on these results, because if you keep losing money over a long period of time, there needs to be change. Alright, that's our breakdown of Vanguard Windsor Fund's latest filing. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.